So welcome everyone to the webinar of foreign exchange and crypto by the University of Chicago. We have a special guest here. His name is Sebastien Donadio. He's currently Chief Technology Officer of Tradair. There he's in charge of leading the technology team. He has a wide variety of professional experience, including being the head of software engineering at HC Technologies, quantitative trading software developer at Sun Trading, partner at IEM Tech, high frequency trading hedge fund, working as technological leader and creating operating systems for the Department of Defense as well. He has also research experience with Bull and an IT credit risk manager with Societe Generale while in France. Sebastien has taught various computer science courses for the past 15 years. This time was spent between the University of Versailles, Columbia University, University of Chicago, NYU. Courses included computer architecture, parallel architecture, operating system, machine learning, advanced programming, real-time smart system, and advanced financial computing. So as you can see, he's kind of qualified to give this webinar. I really appreciate Sebastien to be here. Thanks for joining. And I also asked Emily from the University of Chicago, from the FinMath program, to give us a brief presentation of what you guys are doing.
Great. So thank you very much, Juan. Hello, everyone. My name is Emily Bakke, and I'm the director of our Career Development Office for the University of Chicago's Financial Math Master's Program. And I do want to thank Juan from Peep Trade, as well as my colleague, Alma Ceballos, who organized this webinar, and also for providing me with a few minutes here at the beginning to provide a brief introduction to a really exciting summer program that we're actually offering at the university starting in June. So this program is really designed for undergraduates who are interested in getting a pretty rigorous introduction to the type of material that would be covered more fully in our master's program. So students who participate in this program, which will be online, will have the chance to learn from two of our top instructors, Mark Hendricks, as well as Sebastien Donadio, who will be leading today's webinar. So Mark and Seb will present a curriculum that really brings together finance, math, statistics, and programming as they are applied, particularly in the areas of portfolio management and algorithmic trading. The program itself will run over 7 weeks, and the first 3 weeks will be focused on designing, coding, and testing automated trading strategies in Python, with particular consideration to market models, infrastructure, and order execution. And then the second 3 weeks of the program will cover case studies in quantitative investment that illustrate key issues in allocation, attribution, and risk management. And then week 7 will be dedicated to a final project and exam, and students have access to TA and instructor support throughout the full 7 weeks. The other really cool thing about this program is that alongside the course curriculum, you'll also be receiving a chance to learn more about careers in quant finance through our career exploration programming. So during the first week, we'll provide an introduction to students about the various career paths available for students who study financial mathematics. And then during week 2, students will get to hear from some alumni of our FinMath program, as well as participate in a virtual presentation with DRW. DRW is a trading firm headquartered here in Chicago. They have offices throughout the US, Canada, Europe, and Asia. And they'll spend some time providing an intro to sort of their unique way of combining risk management, research, and technology to create optimal trading and investment strategies. Week 3 will feature another employer presentation, this time by IMC Financial Markets, which is a leading global market maker that uses algorithmic trading and advanced technology to buy and sell securities on multiple trading venues worldwide. And weeks 4, 5, and 6, students will hear from Bank of America and also participate in additional career development workshops focused on resume and cover letter best practices, as well as interviewing skills and LinkedIn and networking, which is all very important, especially now in our current virtual world. So through the combination of these career events, as well as the curriculum that will be part of the program, we're excited for students to leave with a much more solid understanding of the many opportunities in quant finance. So this is the slide that has all the magic details. So the program itself will run from June 15th until July 31st. Classes will meet once a week. So for a 3-hour segment from 6 to 9 p.m. Central Time, Mark and Seb will leave their courses online for students to participate in live. They'll also be recorded along with our career development workshops, so students can view them after the live versions as well. They can also schedule virtual office hours with our instructors and TAs and really make the most of the program. So applications are currently being reviewed on a rolling basis. Our enrollment does close on June 1st, and so you can get some additional information as well as instructions for application through our summer session website, which is listed there on this slide. And if you have some additional questions after reviewing the information, please feel free to send an email to our summer session group at summersession@uchicago.edu. And of course, you can also reach out to me at my email address, which is ebaki@uchicago.edu. So thanks again for giving me this opportunity to share some information about our program. I will turn it back over to Juan and Seb.
Sounds great. Pretty complete. I wish I could have done it, but I'm not. I'm not. I'm too old, probably. I'll paste the link there in the chat so anyone can see what is this about in detail. And I appreciate Emily for sharing this online, and I think it's a great experience and definitely great learning for everyone. Thanks so much.
Thank you.
Thanks. So, Sebastian, should we go through?
Sure, anytime.
Yeah, well, it's your time now. Thanks again for being here.
It's a pleasure. So we're going to talk today about the FX market and the crypto market. So first, I would like to start by describing a bit what these markets are, because some of you are not as familiar as this market with others. And we are going to talk at the end about how we see the market in the future. So don't hesitate to ask me any questions. I mean, you can get me, or you can send messages over Zoom, and I hope that we'll be capable to address all your questions. So that was just an introduction about Tradair. So I worked there for a couple of years with UAD as well. And so Tradair is a company which is providing software to banks and different brokers. So our goal is to provide trading software to trade FX and crypto as well. So I mean, if you guys want to know more details about Tradair, you can go on Tradair.com and you will see what what we do. And at the same time, yes, I teach at the University of Chicago, NYU, and Columbia, and most of the time in financial math or financial engineering of these universities. So enough about me. Let's talk about foreign exchange. So you guys know how foreign exchange works. Basically, you have a currency and you want to change this currency with another one. So that's the basic idea. So what is the foreign exchange market is basically a market where the commodities which is traded on this market is currencies. So it's available, so it means it's tradable for 24 hours and for 5 days. So that's for the FX market. For the crypto market, we will see that a little bit later, but we'll see that the crypto market can be traded like 7 days a week. So the goal is to basically to trade a currency over with another one. Okay. So we are familiar with change. I mean, with foreign exchange, as we know that different government or set of countries, like in Europe, for instance, for the case of Euro, use different currencies. So here, I gave you one example of how the market value of currencies can move. And so I took France, who's my original country, and the US. And here we can see that in France, for instance, we want to import. So when we want to import, we want to buy a product from the US, which is quoted in dollar. For that, what we're going to do is to get a dollar. So it means that we're going to exchange a euro versus a dollar. And because we do this change, we might, because we increase the demand of dollar, so we might increase the value of the dollar. So when the US receive this cash, the product is actually sent to Europe, but that doesn't matter. But the cash which is received in the US, then which is in dollar, has an increased value. But at the same time, when the US do this import from France, we will have exactly the same behavior working. So it means someone from US will change a dollar into euro, and the market value of the euro will increase, the market value of the dollar will decrease, and we will have that all the time, right? So these values are, of course, changed by this kind of mechanism, but there are much more other parameters which can like change the value of a currency. So the interest rate is one example, for instance, okay? So, sorry for that. There is an annotation which appear here. Okay, very great. So the FX market, there are different instruments. So the spot is basically an exchange of cash. Okay, so this is the simplest instrument that you can find on the FX market. It is traded over the counter. So as you guys know, over the counter is when we can like trade between like people, between entities, between banks, and so on. Okay, it's not like the first round. Then we can find the classic, I would say the more classic like product like we find in equities or in fixed income. So outright forward, swap, for instance, and we can find the derivative products such as futures, swap, and options. So I want to like talk about this product because on top of the spot, which are like the most common instrument to be traded, the derivatives in the FX market are also traded a lot. Okay, so who use the FX market? So there are like three categories of, I would say, that I will state this way. The liquidity seekers are people who are in need of getting liquidities, like central banks, government, corporations, and not only financial corporations. For instance, when Samsung is selling a product to the US, we can easily see that the dollar at some point will need to be converted into the current currency. Okay. International equities and fixed income investors are example of people looking for liquidities. Then you have profit seekers. So obviously people wanted to use some alpha, like profit seekers, such as hedge funds, retail traders, financial institutions. And then to finish, we have the dealers. So again, it can be banks and hedge funds, depending on the way that they use this asset. So as we can see on this schema here, we can all these actors have a lot of interactions, and we can find traders on ECNs, on banks, on brokers, and so on. And in the middle, we have the central bank who actually like deal with the money. So what's the repartition of that? So when we see who is trading the most of them are dealers, so reporting dealers. So it means when they do a trading, they need to report to the Fed to be taken into account for like different statistics. And we have the non-reporting dealers and non-reporting entities. So if we take 2019 as a year of reference, the reporting dealer were like around 38%, and the other financial institution represented 55% of the total volume which was traded by these entities. And inside this 55%, we have the non-reporting banks that I was talking about, and the hedge fund as well. Okay. So what's the size of the market? So as you can see on this chart here, the daily volume of the FX market is around like 5 trillion or more. Okay. If you compare that with the futures or the equities market, we can see that it's like 10 times or more bigger than these different markets. And the New York Stock Exchange is very small in comparison of the volume which is traded on the FX market. So where the different markets are located, and that's very important to talk about that, because of course in equities we always talk about the same location, which are like London and New York, or maybe Chicago for futures and so on. But the FX market is worldwide, and we can see that most of the volume is done in London. And then we have just after that New York and Asia. Okay, so that's the main place where we can see like the FX market taking place. But on top of that, you can easily see that the volume on this market kept increasing years after years. And we will see that when we talk about the future of the FX market, but the volume kept rising. So what are the instruments which are traded on the FX market? So here we can see that swap and spot are the most traded instruments. And swap keeps rising, and we'll see that in the futures of the FX market. We'll see that a swap becomes more and more important in the FX market world. spot is obviously still remains, and we have more and more also forward, but in comparison to swap is still small, relatively speaking. Which currencies are the most traded? So as you guys can see, USD, Euro, JPY are the main one. Okay, don't get like fooled by the change of scale. GBP and AUD are not on the same scale as the top four, which are here. Okay, so on the type of product that we have is currency pairs, right? And the most of the currency pair which are traded is USD, Euro USD, USD JPY, USD GBP, and so on. Okay, so that's what most of the time we can find in the trading. But there are more and more countries which are open to the FX market, and thanks to swap on different other products, like some developing countries or Middle Eastern countries who has a product, who has their currency also put in the market. Okay, so they don't appear on this graph because they are not highly traded in comparison to this currency that we have here. So now let's talk about the crypto world. So the crypto world is actually pretty small in comparison to the FX market. So I like this graph because here you can see that the FX market is 1000x more important than the crypto market. So that gives you a sense of scale. So the funny part here, if we were taking the money that Jeff Bezos has currently, he can potentially buy the entire market of Bitcoins. So that means that a human can actually buy a given market. So that gives you sense of how actually big the crypto market is. And Amazon is the market capitalization of Amazon or Apple, for instance, is higher than the entire market of cryptocurrencies. So that's the cryptocurrency world, that's NASDAQ, and that's the foreign exchange market. So you guys can see how small this satellite is in comparison. Okay. So what's the main difference between these two markets? So it's important to talk about that. So the Forex, basically you have liquidity providers, which are here to provide liquidities, and you have your trading system or an exchange, which provide a way of trading, and the traders are going to be able to buy and sell from this exchange. So we still have this traditional way of trading, which is I buy, and then I'm going to have a prime brokerage account, which is going to settle the different buy and sell or orders or trades that we have on the system. Okay, so there is another entity which has the overall the ledger of the trade between two entities. So the crypto market, you certainly heard about how that works, right? You heard about distributed system, and there is a word that everyone wants to say is blockchain. Okay, blockchain. Why is not the only one, by the way, is one of them. Because Bitcoin, which is certainly the most notorious cryptocurrency that you guys know, use this infrastructure. So Bitcoin is using it. So here, it's completely different. So we do not have this kind of traditional way of trading is you guys, if you are familiar with the blockchain infrastructure, the transactions are done and settled at the same time. So of course, when you place an order, when you trade, the trade is actually much longer because here we talk about like maybe it can be half an hour. I mean, let's say 10 minutes to like hours, depending on the instrument and the network. And here, when we do a trade, we can have like maybe like 20 microseconds. Okay, so we will see that a little bit later as well. Of course, the settlement of the currency for most of them is plus 2 days, and for just like Canadian and USD, for instance, is like 1 day. Okay, so very different. Like I was saying, the crypto can be traded 24/7. For this one, is only traded 5 days during the week. What are the instruments? I mean, the type of currencies that we find. So, like you certainly guessed initially, the Bitcoin is one of the most traded currency. Okay, but all the others are getting there as well, and we will see that more and more other type of currencies, because they use a different type of technology, which are much faster than the Bitcoin infrastructure technology, are also getting there. So to give you an order of ideas about the different transactions that you can do in crypto. So when we take like a traditional like Visa settlement, we can do around like 50,000 transactions per second. Okay, with Bitcoin, when we use the Ethereum like infrastructure, we can only do like between 7 and 15 transactions per second. Okay, like I was telling you, different crypto use different type of infrastructure, and some of them are a bit better. So we can reach 30 or 100 transactions per second, or 50 for this one. The network claim that we can reach that, but effectively that's not the case. So when I talk about traditional and blockchain, we can see that the performance of these different technology are very huge, right? When we have like 100,000 transactions per second on the equity, on the crypto, we have this amount maximum, right? So you can feel that there is work to do, but of course, like I said before, the settlement of crypto is much faster in comparison to the settlement of the current of the traditional currency. So that's to give you an overview of the blockchain network, and more. I mean, initially the blockchain was like created. I mean, we talk about that in a paper which was created by a Japanese guy, and this one is pretty famous, which is Satoshi Nakamoto, which introduced this network in 2008, this infrastructure in 2008, and since then we developed and we added like some more layers and created also different type of other infrastructure. So crypto was not well received by government for many reasons, like black market and so on. But more and more larger institutions accept the crypto world. So which will be like a good consequence for the volume that we will have on this market. So the volume, we'll see that a bit in the future of crypto, will increase more and more. So as you guys know, is blockchain. There is a proof of work and proof of concept, which are crypto taxonomy, and they use like some basic crypto to create this blockchain world. So that's some like evolution that we saw also in the crypto infrastructure. The one that we know the most is the public one, where anyone can basically like access and create an exchange. Is permissionless, but use cryptography like proof of work and proof of stake. The problem of this infrastructure is pretty slow, like I was saying, and because we need to mine transaction heavily based on the crypto characteristic and algorithm, we need to consume a lot of energy for that. So it's difficult to scale this network. That's why we introduce after the proof of work, the proof of stake, which is a bit better in terms of like mining these different like transaction that we put on the system. Okay, but we still have this problem of 51% attack, which say that we can collapse the network if we have like 51% of the power of calculation of this network, which will like make all the transaction invalid. It's theoretically possible, but it's not realistically like feasible. So like I was saying, like 10 minutes or more for any like trade, which is pretty slow. Over like the new age of like a more like a private way of seeing the blockchain network, which is better in terms of like energy consumption, and which is much better for also for the latency of transaction. So basically what I want to say with this slide is the technology is also improving, and by like allowing like more transaction per second, it can also increase the volume and the volatility of this network. So now what's the future of these two worlds? So the volume, like I showed you before, kept raising. Okay, so what is important to see as well is the volatility, because we can have like more business with more volatility. Okay? So the volatility has not been so great the last few years. There are some companies which have a business on the NFX who actually like run out business, and some others has to change their business plan to make it work. So in terms of volatility, this world has not been great to trade. The virus, as you guys know, which is around, limited as well the expansion of this market. So because there were less international like trades, and the business relation like kind of like reduced, the volume for the last 3 months has been stable. So it means no raise. I mean, nevertheless, I still think, and we still think that the volume will keep rising for the years to come. Okay, so even with the virus, we will certainly adapt and find some ways to add more liquidities on the market. For the crypto, that's exactly the same, because the institution start regulated this market. We have more and more people having trust and being able to like use this instrument to trade. So when we see the evolution on the first 3 months of this year, it looks favorable. So for now, I will say that the FX market will certainly still rise a bit more importantly than the crypto, because of course the crypto is smaller, so it's harder to increase. But because we have more actors and because the institutions are like favorable of trading these currencies, it can be better in the future as well. So like I was saying initially, the FX for the FX market, swaps has been like gaining more and more market share, and we saw that in the last few years. But what our clients are asking is more and more features for the swap part. And the forward, like we also saw on the graph before, keeps also being more and more traded. So that's pretty important to keep that in mind. Spot has been well, but in comparison to the other, that drops a little bit. Okay, so the future of this FX market is obviously on swap and the forward for now. Okay. How do we trade that? So when we compare the FX market with the crypto market, the algo trading is more and more important. Okay, technology has been a big part of play a very important role in these different markets. I show you like a graph of latency, and this graph is pretty important because like less than 15 years ago, I mean a bit more, sorry, than 20 years ago, to talk about the 100 millisecond latency, so almost 1 second to do a transaction in the FX market. So a little bit later in 2000s, 2005, we managed to reduce by 4 the latency. Like 10 years ago, we were around like 20 microseconds. Now we are around 10 microseconds. And if we follow the trend of the future markets, we can certainly reach like 200 or 250 nanoseconds. So the time of transaction is lower and lower, and the part of the algo trading is more and more important. Okay. So we can see that it doesn't only affect like one instrument, but all the different instruments are impacted by the algo trading. Okay, so spot reached 70%, and the effort in technology, the cost of technology is higher and higher to be able to get to microsecond type of latency. Like I was saying, also for the cryptocurrency market, is getting also there. We are still getting like some very old technology, SSL encrypted transaction for Bitcoin. It's old technology, and we will certainly get to the API level that FX has at some point when we manage to settle and do some transaction much faster as well. So that's for the technology point of view of the market. The settlement time, I talk about that a lot. So it appears that there is a demand more and more for settlement time, which is close to 0. So it means you don't need to wait for another day or for 2 more days to get your transaction settled. And so that's for the FX market. For the crypto market, we already know that it's possible to achieve that because the transaction time is much it's much longer. Okay. So that was to summarize what I was saying about the that we go to electronic trading, they are more NDF, and that's what the FX is weighting. In terms of geography, Asia is very important in the FX market. Unlike other type of like product, Singapore, Hong Kong, Japan, China is also like getting there with CFETs, for instance. So they are playing a large role in all the different transactions. So we can see that they are more and more like instances of like a cluster of machines going to Asia, because we want to reduce the cost and we don't want like to pay the price of getting to London or getting to the US to do transactions. So a lot of infrastructure, of technical infrastructure, are like migrated to Asia. London for now is still the biggest one, but Asia is getting more and more important. Okay, that's a writing about the COVID-19. I summarize. So hopefully this COVID-19 like pandemic will disappear at some point, and we will come back on regular trading. But I have a tendency to say that the market adapted, and we will not have any effect at some point on the pandemic. The way of trading changed dramatically because of that. As you guys know, before trading equities was impossible to do that remotely. Now we can do that. So it's just a question of being adapted to the situation. And because we know that the virus can stay for a long time, the trading at some point will adapt. So I hope that you guys enjoyed the presentation. If you have any questions, I will be happy to answer. Thank you.
Thanks so much, Sebastian. A lot of good information here. I will start asking everyone to ask some questions. I'd like to ask you one from one, right? Do you think that cryptos will ever replace the current foreign exchange?
So that's eventually possible, but not for the next 10 years. I don't see that coming in the next 10 years. I mean, after it's very difficult to predict the futures, and saying no today, and if in 100 years from now we listen to this recording, say, oh, it was wrong. So I cannot say in 100 years for now, but the next 10 years, I don't like foresee like a lot of change, but there are some countries who actually like choose some like crypto, like Iran, for instance, because they have restrictions and they cannot like use dollar. They choose to use like cryptocurrencies instead. So I think it's a way of like sharing goods and like exchanging money, or so why not using crypto, right? So, but to replace the full FX market, it's going to take like a long time if it goes this direction, which actually I cannot guess for now. In 50.
Scalability is a big topic, right?
Yes, that's definitely. Yeah,
So
the problem are also the government, which needs to control that, and since they cannot control, it's still a big deal for them.
Totally agree. So we have one here from Juan Pablo. So I'll read it. If I want to be a speculative trader in the FX market, which platform would you recommend me to use, or which brokerage house, or whatever? Like, do you have any recommendations on any FX platform for the retail investor?
Well, it's difficult to advise that because I mean, I'm working for a company, right? So it's for me difficult to advise any other, like, I mean, advise any platform.
Totally agree.
It's a sort of like a conflict of interest. So if I say something, it's not. I cannot say that because I'm an employee of a firm, right? So that's,
totally. So Tradair, it's B2B, right? Business to business.
Yeah. So it means we provide software, and this software is going to be like used by different banks and brokers. Yeah.
Okay, so yeah, definitely would be conflict of interest here. But thanks. They say Yolanda is good. I've never tried it. I'm not an FX trader. Any
It's
other?
It's a great question, by the way. It's just that I cannot answer the question. Yeah.
Yeah, totally. It's you can get in.
Not in a public form, right?
Yeah, totally. This is recorded. Any other questions from the participants about crypto, forex? Maybe what do you think? Do you think the dollar will be a little bit stronger with all this COVID, or even though they're putting a huge amount of debt in the market?
That's a question. It is again a very interesting question. The problem, I mean, and sorry for the answer, is this virus affected everywhere. So, and Europe has been affected, Asia has been affected, maybe a little bit less affected, but I'm not like a expert in this kind of situation. So I don't think it matters too much. So it means that if you want to trade, any direction is good, right? So if you are an algo trader, for instance, you can trade anything you want in any directions, any possible directions. So, well, it doesn't matter, I would say. But I mean, and I don't want to say that it doesn't matter because your question is relevant, but it's just that I think for trading, and if we want to make money with trading, it doesn't matter too much.
Yeah, totally agree. Not for trading. So we have another one here from Jonathan. First of all, thank you for the presentation. When doing FX market analysis, which is more important, or the decision ruler, fundamental, quantitative, or economic analysis?
Great question as well. So I actually saw the three, right? So when I was trading FX in high frequency trading, it's clear that a signal of the market, so about the infrastructure of the market, was more important than econometrics direction. So my answer for this one will be the following: depending on the type of horizon of the position that you're going to take, different type of signal can be used. So it means that if you want to invest in longer term, using econometrics will make more sense, or fundamental will make more sense than when you trade high frequency trading, where obviously I don't want to say arbitrage because in the FX world it's very badly received, but when you have this different type of horizon, you will take into account like different characteristics. So what is more important? I would answer this way. It depends on the horizon of the position that you want to make. And
Yeah.
sorry, Juan.
What you're saying is maybe for day trading you'll do a lot more quantitative, like technical analysis.
Yeah,
Is that,
yeah.
yeah.
But I think which is applied to FX are also applied to other kind of like instruments. So it's not so specific. Yeah.
Totally. So Jennifer Torres says, thank you for the presentation. Cesar is asking general opinion of FX market analysis supported by technical analysis, proven analysis for companies regarding the FX market and trading decision. I don't understand this question. Did you understand the question, or?
I'm reading the question again. A general opinion of FX market. So is the question is like oh, I think
well, there's another one, and maybe if you can rewrite it, Cesar, it'll be great. Jorge says, is there more risk in Forex than in stock market?
No. I mean, the risk obviously is it depends on your way of trading. But now, I mean, if we want to talk about like how to hedge the risk, for instance. So if you trade equities, it's likely that you need to hedge your position on the market by something else. So with the FX, I would say is almost like if you auto hedge at the same time, right? So if there is like if you invest in one currency, one go down, the other go up. So it's less risky, but I don't want to use this word. I would say that of course you can lose a lot of money depending on the way of trading, but in terms of hedging, you will have to use less hedging that you use in the regular like other markets.
Got it. And many people in FX trade with a lot of leverage, I would say as well, right? Mm-hmm. So
yeah,
the biggest market is first swaps and then foreign, like forwards. There's leverage there. So yeah, maybe if you're doing leverage, you will have a lot of risk as well.
Yeah, and the thing also of the FX market is a lot used to hedge some like stock positions. So for instance, depending on if you trade like foreign entities, you will use the FX market to hedge that, right? So it's also another way to consider the FX market.
Right. What is your opinion, Jonathan, when some analysts call Bitcoin a speculative bubble that could explode? Do you think that
I think that the network can explode first? Mm-hmm. No, I mean the infrastructure of Bitcoin is hard to scale. So you certainly heard like in the recent past years the length, I mean the latency like constantly increasing. It's true that our power of calculation increase, but because it takes so long to mine and to add the transaction to this network that the transaction time is like longer and longer. Is it going to explode or not? I don't know. We saw like 2 years ago a surge, like 3 years ago, like so it means like the value increased a lot and then decreased a lot. Is it going to be stable, stay this way? I think it depends also on what the other like instruments can do. Okay, so if we have like equities and FX and fixed income, which are like doing well, so maybe crypto will not be so important. If then we cannot make money with that. Maybe crypto will come back and do more. It's difficult to answer this question, even if it's again very interesting questions. But for me, I don't know what's going to happen with Bitcoin. Bitcoin will certainly needs to change at some point. Technical infrastructure. That's for sure.
So there's no way to become adopted if you don't have scalability, right?
Yep. Mm-hmm.
So there's another one from JM. What about the stock to flow model prediction in the Bitcoin price? It would be a correct model for it? Stock to flow model.
Stock to flow model. I'm looking at the same time. I'm not very familiar with this model. So I prefer taking this question a bit later. Because I don't know the model, I don't want to say like I don't want to say anything about that. Okay. Is it to join a big demand?
Sorry?
Is it to join a big demand? Are you familiar with the stock to flow model?
No, I have no idea.
Okay. Yeah, maybe Jim, you can send me an email and we can like discuss further. I'm just not familiar with this. Or I don't call it the same way, or I don't know. Yeah.
Excellent presentation. Well, we have Cesar, previous questions. What is your stance regarding technical analysis in the FX market? Well, I think you answered that, right?
Yeah. So like I was saying, right? Depending on the time horizon of your type of investment that you want to do, it can make sense to do technical analysis. So yes, that works. It's one of them. In any case, the best way is to backtest your theory and to see if that works. So technical analysis works for sure. Yeah.
There's another one from Rolando. He says, excellent presentation. Can you tell me what is the main risk about data mining from a domestic device?
Domestic device.
A computer.
The main risk about the data mining from I don't know. I mean the main risk, if it is to answer the question, can we do algo trading, and on top of that we do data mining? It all depends on the quality of the algorithm that you have chosen to do data mining. So in data mining, we can, I mean, I don't know if we can talk about machine learning here, about like what I think about like neural network, about like more advanced like AI characteristic, because obviously the future of the FX market is also linked to all the different like new statistical model that we can do. So if we talk about that, I think AI is, or machine learning in general, is depending on the type of like, again, of investment that you do, at which horizon, because if you do like small short-term position, you will not manage to do that with very sophisticated machine learning method. Just a correlation will be enough. For instance, linear regression, correlation, auto-integration work. Now for like more sophisticated ones, the SVM, random forest works pretty well. I still need to see neural network and reinforcement learning, deep learning, obviously, work with FX. I didn't see a lot of like, I mean, there are a lot of projects on that. I didn't see a lot of value in terms of return of this project. And sometimes the solution which are easier works better. So that would be my answer for this question about a domestic device for data mining, if I generalize the question.
So there's one again here. In the long term, would you say that cryptocurrency value will depend directly with the installed infrastructure? Is it linked that like the
there is a correlation. Now depend directly. No, I mean there will be a correlation. That will be one parameter.
Okay.
Yeah.
Will be one of the parameters.
Yes.
So I have another question.
Yeah.
So right now, everyone wants to get ahead of what's the best model. You know, everyone's doing, not everyone, but many people are doing algorithmic trading, right?
Yep.
Many people are investing in AI. Many people are doing a lot of different things. Do you think, is it possible to have an edge in that, like a consistent edge, or maybe you will have it for a few days and then the market will catch it up? Or is there a way to have an edge on making consistent profits on FX?
Well, I think you give the answer. So I mean, in this trading and nowadays, and like you say, in algorithmic trading. So what is algorithmic trading? Is two components, right? You have like the statistical models, and then you have the infrastructure. Okay. So at some point, there will be someone who has a better infrastructure, which trade faster, which will have more capacity, we can collect more information. So this edge will depend on the technology. So like I say here, in terms of technology, it's hard to keep the edge forever. You have like companies who spend like, I mean, I can give you some name like Jump, Virtu, XTX, spend like so much in terms of infrastructure that it's very difficult to beat them on some part of trading. Okay, so that's for sure. They can keep this edge because the investment is so huge and the skills of engineers are so like heavy that is difficult to compete them. Now, in terms of statistical model, there are research papers which are obviously saying all stuff, and they are written because, of course, if it's written, it means it doesn't work. But point is that if they are like new, like when you take like, for instance, neural network and you see the topography of the different neural network that you can have, there are plenty, right? Recursive neural network, like different type of neural network which can benefit the trading part. Can be potentially used, but if some people notice that they're going to be used, they might use them as well. So yes, the edge is always temporary. It's a war. So sometimes, I mean, the more complexity you put in the hedge. So it means if you invest a lot in technology and in your statistical like model, which can be like unique, you will have the edge for like potentially a few years, maybe 2 years. Otherwise, yeah, it can be like 5 months. I mean, for those who are not very familiar with the FX market, high frequency was a big deal because the bank cannot follow, and doing some arbitrage was almost forbidden, and otherwise you lose your like partners. So it's, I mean, the relational is also a big part in FX, and that's also a factor that we need to take into account. So it means the liquidities that you're going to produce will be also like needs to be like beneficial for other parts of your trading.
Okay. Yeah. You don't want to screw your clients.
That's correct. And yes, as always, depending on your partners, you need to adapt, and depending on the technology, you need to adapt. So I wouldn't say that there is something specific to the FX market that I will not be able to say for the stock market, because I work in both, and they are pretty similar. Mm.
So we have a couple of comments here from Gonzalo. Thanks for the webinar, Sebastian. It was very interesting presentation. Thanks a lot. Abel, excellent talk. Would be amazing to have similar ones in the future. Also, I posted again, you know, like if I had a chance, you know, University of Chicago is, I don't know, top 10 always and specifically in this type of subjects. They have Nobel Prizes, and I think it's a great institution. And if you're interested, I already posted again this link for the financial math program that they've been good partners for five years from now, and we love the institution. And I've seen personally how many Nobel Prizes are there just you know, just walking across the street from your FinMath building. It's pretty interesting. So thanks so much, Sebastian. It was awesome to talk to you. Thank you very much, Alma, for setting this up. And
I'm going to provide my email for the people who wants, because I was asked that. So I'm giving you my UChicago email address. Mm-hmm. And if you didn't have time to take my address, you can also contact Juan or Emily or Alma. Obviously, they can share my information with you guys.
Okay, I'm gonna post my email here, and thank you very much. You know, to the University of Chicago, Emily, Alma, Sebastian. I know Mark is also behind here, so this thing, I really appreciate your time. Great talk. I'll be publishing this in social media, in the Mexican Stock Exchange. They will have it in PipTrade as well, and I'll send it over to you guys as well. Very interesting conversation. Thanks so much.
Thank you again. Thanks everyone for listening, and don't hesitate to send me an email or to add me on LinkedIn if you have any question, or if you would like to have further discussion. I'm always happy to talk, as Juan knows.
Yeah, I know. Thank you very much.
Thank you. Bye-bye.
Thank you everyone for participating.
Yeah.
I'm gonna stop the